everybody, and welcome back to another episode of the Weekly Review Show. So welcome back to this week's episode of the Weekly Review Show. If you're new to this series, welcome. I'm so glad that you found the channel and the series, and I hope you enjoy. For those of you who are new, this is where we sit down at the end of the week with a glass of very nice unalcoholic drink, of course, and just listen to how the markets have been doing over the week. I usually have some sort of funny thing at the start, but I couldn't think of any possible thing to do with my drink. So if you guys have any ideas for some intros, leave it in the comments. But we'll head into the first segment as per usual, talking about the precious metals. Alright, let's start talking about the precious metals. In priority, we will be discussing gold and silver, but we will have a look at some of the other ones as well, just for those of you who are interested. And I'm very, very happy to reveal this week's review of, in particular, silver. So over the past week, silver hit the $27 per ounce mark. This is in Australian dollars, for those of you who are Australian, of course, and in US dollars, that is very close to 19 US dollars, about 18.85. And so the Australian price of silver has been quite magnificent over the past few days in particular. So silver has been doing some pretty exciting stuff. In particular, I think it was 2 days ago, we saw the price of silver do very well, in fact go to near $27.50 per ounce, which was very good to look at. As we can see today, silver has gone up to a high of $27.26. It has dropped down to $26.66 and is now at $26.94. So this is silver for today. It actually started up a bit higher and came down, but if we have a look at the monthly price, we can see that this is actually the all-time high for the month after the spike that we saw a little while ago in May. So on May 15th, we saw the price of silver go up quite significantly, actually, near $27.50 again. And so we've seen another spike today, which is very good, and over the past few days. That essentially means, when I'm talking about the spot price of silver is the actual value of the metal. So it just means that the price to buy is increasing. And so we've seen silver at its all-time high for the month just 2 days ago. As you can see, it has come down a little bit, but we did see a spike of $26.40, so very near that $27.40. So very near the $27.50 mark, which would be incredible to see. I'm feeling like we're at a point of resistance at around that $27.50 mark. That basically means that we've come up to it a few times over the past few months, but never quite exceeded it. As you can see, the last time that we actually went above $27.50 was all the way back in about, I'd say February, about mid-February this year, when silver was at about $28.50, which is very high actually. And then we did see it drop when the whole market dropped down to under $21.50, and it's gradually made its way back up, spiking again on May the 15th. As you can see, the spike is right there coming back up, and those are the big ones that actually made it over $27.50. But that's all for silver. Let's head over to gold. Alrighty everybody, we're going to have a look at gold now. Also, if any of you are interested in some incredible financial resources, such as some really good reads or some equipment to help you with your investing, make sure to use the links in the description. They will help you out a lot. Now we'll have a look at the price of gold. So we'll be averaging between the ask price and the bid price between this whole video, which is basically how much you'd buy for and how much they would sell it to you for. But the average between the two, as I'm recording on the 11th of June, is exactly 2,588 Australian dollars per ounce of gold. So this is actually quite high for gold. Again, gold's all-time high is near 2,600, 2,700, 2,800. It's around that area. It's a big number because, as you can see, gold does move quite largely, whereas silver is a smaller value. So you'll see it move in the matter of cents, whereas gold is moving in dollars. It's moving quite frequently in dollars. So over the course of today, we've actually seen gold spike above that 2,600 mark, $2,600 per ounce of gold, which is very good. I'm very happy to see that gold is making it above there again, and it's extremely good to see. So after we did see gold go above that 2606 mark today, it did come down a bit, but that was the spike for the day, as you can see right there. Gold has been doing quite interestingly, I could say, over the past week or two. Gold has actually had a very big spike sometime earlier this week. Gold actually jumped by quite a significant amount. That was very good to see. Over the past month, and in particular the last week, we've seen gold go up quite significantly with a near to $20 rise in a single day, which was very significant for gold. Obviously, with the price of gold being $2,500 at the time, that is a significant price jump for gold. Obviously, it's getting close to the 10% mark in a single day, which is quite incredible to see. It'd be around 80%-ish, 8%-ish, but that's still very good for one day in gold. As you can see, over the past month, gold was sitting at a low near 2,400 for a while, but has gradually made its way back up, proving that it is very stable. As you can see, over the past 5-10 years even, gold, yeah, it does well. Gold is a very, very steady way to preserve your wealth, and sometimes it's a good investment. If you buy low and you sell high, you're obviously going to make some profit off that. But that's all for the precious metals, and now we'll just briefly touch on platinum and palladium. So today, platinum is trading at an average between the ask and the bid price at exactly 1,190 Australian dollars per ounce, which is not bad for platinum. It did spike up quite a bit today, near 1,250, so it's dropped a bit, but still pretty good for platinum. Obviously, it's been quite volatile over the past month, jumping up and down, spiking and dropping, but that is it for platinum. Quickly touching base on palladium, it is currently sitting at an average between the ask and bid of around 2,844 Australian dollars. So it's actually getting very close to the gold price. As you can see, gold was what, 2,600, and palladium is 2,844. So that is actually very close. You know, it's a matter of what's going to happen in the market, what's going to affect these. But we've seen palladium up much higher than it is right now. So I think the palladium to gold ratio is looking pretty good if you wanted to buy some palladium or gold. It's up to you guys, make your decision, but let's head on to the next bit now. I'd like to take the quick time to thank Intrinsic Tenders, Bars and Coins for supporting my channel. It means so much to me that you guys reached out to me, and you really helped the channel in so many ways, so a big thank you to you. If you guys aren't already subscribed to the channel, make sure to hit the subscribe button that looks a bit like that gold thing next to me. It will really help me out, and I can't explain how beneficial it will be for you to listen into some of these videos. Obviously, I am a kid, so I appreciate any criticism, but constructive feedback, any things that you like, anything you think that I could include to make the videos better, anything at all is much appreciated. So thank you very much for watching this video. If you guys want to become part of the Investing for Kids community, I highly encourage you to, again, hit that subscribe button. Stick around because I'm trying to make everybody's life easier. I'm trying to make investing at a younger age easier for everybody trying, and I guess that's my goal for being on YouTube and for the Investing for Kids idea. That's all for now. Let's head on to the stock market, and a big thanks to you all. Alright everybody, welcome to the last segment of today's report. We'll be having a look at some of the members of the stock exchange. So we'll start by taking a look at some of the regular ones, as we usually do, and that includes the S&P 500 ETF. S&P 500 ETF is essentially an index fund where you go and invest with them, and they will put your money across 500 different companies of the top performers. For example, Apple, Netflix, all those different things. And currently the share price of IVV at close today was $318 US. So that is actually pretty good for IVV. It's near the all-time high, and we've seen IVV recover quite well from the market crash back in around March 2020. I am predicting that, and obviously you can't trust anybody. That sounded dark. You can't trust anybody. No one is a fortune teller. I don't have a crystal ball, but I predict that the economy may have some rough times ahead, and that is why I haven't bought back into S&P 500 just yet. And it is near the all-time high, and given that I can estimate that it will go down a bit in value, I don't want to buy at the high price and lose money at the end. So we will have a look at the weekly price of S&P 500, and it's actually been pretty flat this week. Pretty flat. We saw it start at $317 US and finish at 318. Obviously, not a very big change over the week. That is a very fractional increase, but we did see it go up quite a bit after close today. It was actually up 3.14%, which is very significant actually. So today started at $315 US, dropped down to near 314, and made its way steadily back up to that lovely $318 mark. Over the last month, we've seen it have some drops and some spikes in the meantime as well. As you can see, that is the past month for S&P, up and down a bit. Obviously, we're trying to get some financial stability in here. And over the past 3 months, it's pretty much just green figures because they did have a drop in the price, as you can see there. And that drop will become evident when you look at the 6-month mark and they're in red figures. You can see that they absolutely plummeted when the stock market dropped back in March. But they have seemed to make a good recovery, and I'm intrigued to see how all of this works out. The next one that we'll have a look at is one that I've had my eye on for a while, and I've been considering part of it, and that is VanEck Vector's Gold Miners ETF. So essentially, this is just a way to sort of buy into gold miners rather than gold physical ETFs. So a lot of ETFs you can get is where you buy the ETF in gold, and it's essentially backed by physical gold at the place where you're investing in. To me, I personally prefer to have my gold at home, just because the whole idea of buying physical assets like gold and silver is that you have control over them and they're not just numbers on a screen. So that's my reasoning behind not getting gold ETFs. However, this is a gold mining industry ETF. And given the $20 jump in one day for gold over the last week, I'm expecting that this has been doing quite well. So you can see over the past week, they're in green points. They started off at about $36 US per share and actually made it up to, did they make it $39? That would have been where the spike was, I'm guessing. And then they came down to sit healthily at about $38.50. So they've been doing quite well over the past week. Obviously, that much of a change in a small share is very significant, because if you started the week at 36 and went to 39 at one point, that is nearly 10% growth, if not 10% growth, depending on the cents involved. But that is very good for a week. Imagine buying in and then, having your money grow 10%. If we have a look at the 1 month growth, they started off at 32. What did they start off? 33.54 per share, dropped a little bit, and then continued to rise and rise and rise up to near the 39 mark, over the 39 mark. So that is the 1 month look at this share ETF. Same is good for 3 months. They even are in green points for the 6 monthly marking, which is very good to see, to be honest. Yearly, they're still in green. 2 years, still in green. 5 years, still in green. 10 years, however, they are not in green. And that is what I want to talk about. And that is because they were actually doing very, very high trading back in 2011, because gold was at a very high price in 2011 as well. They were near $65 a share, and this is US. And we've seen it go down to nearly $10 per share. And so given that it's at 38 out of 65, we can definitely see there's still a lot of potential in the share price. If you guys want to have a look at the symbol in the stock exchange, it reads GDX. So I'd recommend checking it out, having a look. It's good to have your mind open to lots of different things. And that's pretty much all I wanted to talk about. that's it for the stock market area, and let's head into the last bit. Alright everyone, that brings us to the end of the weekly review. If you're still watching at this point, a massive thank you. It means so much to me, and I'd just like to ask your personal opinion on any ways that I can actually make this series a bit more interesting. I'm aware that it is one of the more underperforming series on the channel, but I have so much fun creating it, sitting here in the studio in a different spot with a drink. I just really love making these videos, so I'm wondering what I can do to increase the engagement from you guys. If you have any thoughts or opinions, make sure to use the comments below. That would mean so much to me. Make sure to subscribe to stay tuned for some more videos. And until next time, everybody, with a big cheers, goodbye.